So welcome back. It's May 7th. The big Group D dividends for YieldMax were just announced. I did add them to my website here, so YieldMax ETFs. It'll pull up. If you want to filter all, you see all the YieldMax dividends. These are the monthly dividends. They focus on a single stock. I haven't included any of the short funds that are like the anti-inverse of a stock. But I'm looking at Group D. So if we don't filter all and go just to Group D here, and we look at the dividends, let's filter based on the highest dividend received. I'm just going based on the sold dividend, not the percentage. If you wanted to filter based on the percentage return dividend, based on the dividend divided by the recent price, you could filter by this column here. In this case, it's almost the same, just the AIYY. Although the dividend's the smallest of Group D as a percentage, it's about the third highest. So something interesting to take a note. But overall, yeah, MSTY, $2.37, very solid there. Back to the old MSTY days, being over 2. SMCY, $1.41. Amazon came in pretty good, 80 cents. Then APLY, basically all Group D was pretty high. APLY, 65. Disney, 53. Block or XYZ, 41. And then AIYY, 32 cents. From a total return, or not a total return, but a percentage return basis, this little graphic here gives it a magnitude relative to the other ones. You can see MSTY coming in at 9.45%, SMCY 7.9%, AIYY 6.78%, even Amazon was over 5%, and APLY 4.79%. XYZ 4.61%, and finally Disney was the lowest at 3.8%. Very solid for Group B from a percentage basis. And then here's the cumulative dividends. So cumulative dividends paid since inception. MSTY came out at 20, or here's basically the initial price that these ETFs started based on their inception date, which is also noted here. You can see we have cumulative dividends of 36, 18, 16, 13, 10, 9, and 9.26. So all these funds have paid over $9 of the cumulative dividend since inception. MSTY is almost getting up to 200% times its initial value as far as the cumulative dividend paid out. If you include the actual ETF price as well, you get 210% total return. But yeah, pretty solid for Group D. I think everybody agrees on that. Going forward, I'll have to add in the weeklies so you can take a look at those too, from all the metrics that were already discussed. But yeah, I guess if I go into Group D specifically, MSTY is the largest fund, the one everybody cares about. As far as why it's the largest fund, if we go back to this thing and just include all of the monthly ETFs, and we want to just pick out the top 10 funds based on, let's say, total return percentage, you can see MSTY's right at the top. It had an initial price of 20. Recent price of 25, paid out $39 or $36.90 in dividends, and total return percent 210%. If you want to look at the top 10 in that order, you got MSTY, NVIDIA, Palantir, Coney, Netflix, Facebook. Let's see what that's at. That's 6. Amazon 7, Microsoft 8, XYZ 9, and Babo 10. That said, this isn't I guess, apples comparison, because some of these funds have been around longer than others. So you can see MSTY early 2024, whereas NVIDIA has been around since mid-23. And then something like Palantir, late 2024, just came in. Babo is one of the ones, that was also 2024. So these funds have different inception dates, but just going on the total return since inception, those are your top 10. It also aligns with how big the funds are. Clearly, MSTY, I think, is the biggest. NVIDIA is also a big one. So people clearly piling into the ones that are doing the best. As far as the ones that are doing the worst, we got Morrow, Murni, SMCY, AIYY, Exxon, Carvana, TSMY. I know when I initially started this, or looking at this, I was wondering, do you want to get in one of these funds that's the underlying stock price or equity is more volatile, therefore creating a higher premium? Or do you want to get in kind of a less volatile, more stable stock or underlying equity that generates less premium, but perhaps the NAV won't fluctuate as much? clearly, I think overall, I guess you could take different perspectives on this, because I suppose something like a Maro or a Murni or even an AIYY are pretty volatile underlying stocks, and you can see the funds hasn't performed very well. But you get these like Coney and MSTY, NVIDIA, even Palantir. You can see the ones that have the underlying equity with a lot of implied volatility. Over time, the cumulative dividend adds up so fast. So these funds do become some of your favorite ones. MSTY, of course, exceptional because the initial price was 20. It's currently at 25. So the NAV's actually higher than it was when it came out, which is somewhat unique to these funds. Usually the NAV goes down with time just because you cap your upside, so you don't get the full gains, but you participate in the losses. So something like Coney, for example, even though it started at 20 and it's now in the 7 range, the underlying volatility has contributed to the cumulative dividend being at 28.61. So the total return, even though the net asset value has gone down so much, your total return is cumulative dividend plus your recent price, so 36 on a 20 basis, or an 80% total return. So yeah, I guess those are your top 10. Now, just looking at some of them specifically, I'll probably focus on MSTY, as that one's one of the most held ones. But yeah, I mean, if you look at the distribution per share over time, we got the 2.37. So as I said, that kind of is old time MSTY, over $2 a share. We did have a couple months there. There was like low dollar, $1.37 and $1.33. So we're back to the $2.37. Clearly not up to these $4 plus months, but I'm sure everybody's probably pretty happy getting back to above $2 distribution for the month. On a comparison, the underlying MicroStrategy, you can probably see it here under this tab. It rocketed higher late 2024, obviously fell with the whole market, and then is back on quite a bit of a rebound. Comparing the 3 scenarios that I usually compare, basically start off with a $2,000 investment. Where would you be if you would have reinvested your dividends, not reinvested your dividends, just kept all the dividends in a no yield checking account, or actually just, instead of doing the YieldMax fund, just bought the underlying stock? Clearly, the underlying stock's still better, but these YieldMax funds are performing pretty well, definitely capturing some of the upside of the underlying equity, as well as paying everybody a pretty good premium. Clearly taking the premium and reinvesting it recently with the resurgence in the MicroStrategy stock and the MSTY ticker has created some separation between these two strategies. And then perhaps my favorite graph, the price plus cumulative distribution. So the price of the underlying ETF plus your cumulative distribution. So the price, or if you just track the price of the MSTY ticker, you got this light blue line. And then if you track the cumulative dividend, you got the green. So you can see the green just constantly goes up as those dividends continue to compile and stack onto one another. So as we said, MSTY, we're up to 36.90 in cumulative dividend. And then a recent price on the ETF was just over $25. So you add those two together, and based on a $60 initial or $20 initial investment, we're above 60 total return. And that's how the total return breaks down between where the ETF price is currently and your cumulative dividend. Just something to consider. If you would have started with 100 shares back on inception date, you would have reinvested constantly as you got them at whatever the current price of MSTY was at the time. You can see it'd be just over 320 shares in that time frame. And then getting a cumulative look at everything, we have the distributions, which is the same as this distribution per share tab. Then we have the cumulative dividends. And then this light blue line kind of shows the tracking of the MSTY share price, ETF share price over time. And then the purple line, of course, is your total return. So we're marching back up higher. That cumulative dividend continues to grow. Everything's looking pretty good from those who own the MSTY ETF. As far as other ones, that looks pretty good. Amazon looked pretty good. AIYY actually looked pretty good, despite this one's interesting because this one hasn't performed very well clearly hasn't performed very well from a ETF price. If we look at the price plus cumulative distribution, so it started at 20, it's currently under 5, but you can see the cumulative dividend has paid out. So you've gotten 50% of your initial investment back already. And then you still got an ETF that's worth about 5. So you're clearly down about 25. But the underlying, or the YieldMax ETF, just looking at that price, that's been dismal for people. Hopefully they've been in it for a while and have collected all the cumulative distribution. But I guess for new investors, you got a 32-cent dividend or distribution on a $4 and change stock or ETF. Therefore, from a percentage basis, it's looking pretty good. And you can see if you were to start with an initial $2,000 investment, clearly reinvest your dividends in something that's been going down. It hasn't been the best choice, but not as bad as I would have predicted just from looking at the price. Yeah, something starting out at 20, currently just about 15. It's probably best shown by this chart. So the purple is your total return. So starting off at 20, we're sitting at about 1480 with an equity that's doesn't seem to have gone up and down too much. It's going from 40 down to 22. Clearly kind of wrecked the YieldMax ETF strategy. But yeah, something to consider. I noted from my initial page, this initial YieldMax, if you go on the total return or the percentage return basis and just filter based on, so this percentage return, just to clarify, is the recent dividend divided by the recent share price. So it reflects your percentage return on a monthly basis. And so AIYY, 6.78%, pretty solid on a $4.78 basis. But yeah, that's what I wanted to cover today. Overall, Group D, really good from a percentage return basis on the monthly distributions for Group D. So hopefully we get to see that going forward. And I guess thanks to everybody for tuning in.